Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, January 8, 2015. You're looking at a daily chart of the SPY, and what a big day today was in the market. On more volume than yesterday, we had a huge up day. The Dow was up 320 some odd points. S&P was up 36. NASDAQ was up 85. That's just an unexpected vault off this bottom here from the other day. You had first up day, second up day, and the other day or all week long I've been telling you that Wednesday was a cycle bottom and it's plus or minus 1 day. So basically the market bottomed here. This was Tuesday. Here's Wednesday and here's Thursday, right? That's pretty strong. So off these cycle bottoms, we usually get a multi-day rally. All right, so multi-day could mean 2, it could mean 4, it could mean 5. So we're not really sure, but here's the kicker. Another cycle, believe it or not, comes in on Friday, and of course it's plus or minus 1 day. Well, minus 1 day is gone, so that was today. So there's a chance, and it could be just a stall out, right? So on Friday, the market is due to turn. So it could turn Friday plus 1 day. So we could have an up day Friday, and we can turn down Monday. And that doesn't mean we're turning down for a week or anything. It just means a turn down Monday, or more. But it's no telling how long it's going to last. Or it could be just a slight down day tomorrow, and that would actually count. And usually Friday you get somewhat of a quiet day, and you certainly could get a little bit of a pullback after these 2 up days here. So I'm not going to read too much into that short-term cycle that's due on Friday tomorrow. But nevertheless, there could be some more upside in this market. But my best effort is that we're probably going to maybe move sideways for a few days. And keep in mind, next week is options expiration week, okay? So on options expiration week, you get a lot of whipsaw action. You get a couple of up days, couple down days, maybe a pause day in there. The institutions whip stocks around, and I wouldn't look for 4 or 5 of up days next week. But here we go. So off this bottom, can we see new highs? Yeah, we could. We've had larger volume today than yesterday. So today's volume was 147 million on the SPY. Yesterday was 125 million. That means that there's real buying. So there's a bid underneath the market right now. So you have the buy the dip crowd believing that any sell-off is a buying opportunity, okay? So they kind of stopped believing in here for a while, but then over here you saw this huge rally, and now over here you saw another bounce. So what'd you have? You had a low, you had a higher low, now you had a higher low. So, all in all, this is a bullish sign. This is a bullish pattern. If you just go over to the weekly chart, let's just keep that in mind, bullish pattern. Where are we? Well, you're above all the moving averages, okay? You broke these moving averages here in October, okay? But here you tested and bounced off to 20. You tested and bounced off to 20 this week. So this is all still bullish action. I mean, as long as you stay above these moving averages, that's a bullish sign. So, until you see some kind of confirmation on the downside on a weekly basis, you have to believe that the market is strong, and it is. So that's kind of my take in the SPY. Now, what's interesting is, I told you that several markets were due to turn. We saw a turn in the interest rate market, and yesterday it began, and a bigger turn today. The bond market went down, interest rates went up a little higher, and you had a turn, maybe a slight turn in the crude oil market. I'm not reading too much into the crude oil market. We'll get there when we get there in a second. And gold went down again today. So, so this market turn played out, right? The dollar is the only thing that didn't turn. In the Globex session, in the aftermarket session, in the after hours, since the currencies trade all night long, or they trade 24 hours a day, just not on Sunday night. They stopped Friday night to Saturday, but you're down slightly in the dollar, but the dollar is bullish. Hasn't really no pullback in the dollar to speak of, but all the other markets did make a turn. So it's interesting. So those turn dates do come in. They don't come in all the time, but they come in probably, I would say, easy 7, usually 8 out of 10 times. So I usually rely on them pretty good. And, I don't rely on them solely. I just rely on them based on what the market's doing. And if the market's in a strong uptrend, I'm going to look for a pullback. If the market's been going down for 4 or 5 days in a row, I'm going to look for a bounce. And that's what we got here. So this one worked out pretty good. So let's just flip over to the gold chart and let's take a look at what we have in the GLD. Okay, so let's recap the GLD. So GLD, I said that an upside target for the month of January, within the month of January, on the spot gold price was going to be 1240 to 1245 or higher. Okay, right now on the Globex session on the spot gold, we're at 1210, almost 1211. Okay, GLD is had a slight down day yesterday, another down day today. So what you can be doing is putting in a bullish pattern here. As long as you stay above these moving averages, red is the 20 and the blue is the 50. As long as you stay above these moving averages, you could be setting up for another push higher. And that 1240, give or take, level coincides with about this 118, 119 level up here. And this pivot top would make a good resistance point. So that seems to line up, at least in my book. So we'll see how that plays out. But you could see sideways in gold for another couple of days, and then maybe we make another push up higher. So keeping our eye on that. But keep in mind, you had a low, higher low, higher low, higher low. Broke down here a little bit, but never closed below this low. And then off to the races last 3 days, or these 3 days, and then we moving sideways here. So we'll see. It's still a bullish chart in my book, and I believe that we'll see that 1240, 1245 or higher within the month of January. But you could see a pullback first, so be aware. Don't just hop on board at any point in time. But if you see real weakness and you see a pattern set up, I'll certainly let you know. Let's go over to crude oil. We'll look at the USO for a second. There's really not much to look at in the USO. It's it's still pretty weak. The oil market tried to stage a little bit of a minor rally today, but television on CNBC, Tau TV, they tried to call it a rally, but it's not a rally. You're still at $49 a barrel on the February contract. USO can't get off the mat. There's been no definitive bottom in oil, although the oil or energy stocks today did relatively well. You had Exxon up, Chevron up, was Conoco up? I didn't take a look at Conoco before. I'm assuming Conoco was up. Yep. Occidental Petroleum was up, but not as much as an Exxon, for example. So you did have some positive moves in the energy complex. XLE was up. But basically, when you have an update like this in the market with 300 points up on the Dow and 36 points in the S&P, you're going to have a tough time finding stocks that were down, right? So that's a bottom line. So we're not going to read too much into that for the energy sector, but I still have lower prices ahead for oil. That's just what I'm reading. That's what my calculations are giving me. So we're still going to go with the 45 and then a 43.50, maybe even 42.50 on the downside. Exactly when, don't know, but until I see a definitive bottom, I'm going to have to believe we're going to see lower prices in crude oil. All right, let's just take a look at interest rates real quick. So let's look at the TLT. All right, the 20 to 30 year ETF, that or 20 to 30 year bond, treasury bond market track. This ETF tracks that. And, I said that Wednesday was going to mark a cycle top plus or minus 1 day in the interest rates as well. And here we go. Nice down day. This is down day in the bond market, which means interest rates were up. So if we want to take a look at the interest rate on the 10-year, we're going to look at TNX. Okay, and TNX yields were up. All right, so here you go. Bottom. And I said this could be a bottoming tail the other day. Well, as it turned out, it held, and so you had another nice up move today. We'll see what happens from here. I don't expect much upside right now. I think there's still going to be some pressure in interest rates on the downward, and I think there could be higher prices in the bond market, but everything pauses. Let's go back to the TLT for a second, and I'll show you. Right? So what happens is, remember I said this 20-period moving average, I always point out that it's like home base, right? So market likes to stay close to the 20-period moving average. Look what happened. You got way extended here off the 20, pulled back in. hover around the 20, extended, pull back in, extended, pull back in, extended, you're pulling back in. So that's a garden variety barometer that we use. Call the 20-period moving average home base. So once you get very extended from the 20-period moving average, look for a pullback to start anytime soon. So what you do is you look for that in accordance with other markets that are turning, and you look for the indicators like I always show you here. And then my cycle turn dates, which I always tell you about, is a good indicator. If you have an extended market and a cycle turn date is upon us, you can expect that to work out more often than not. And that's what we saw. One thing I want to look at tonight, or the last thing we're going to look at, is I'm going to look at the VIX, because I haven't talked about it in a couple of days. But last week, whether it was Monday or last week, yeah, it was here. It was on the 6th. So on the 5th, the video on the 5th, I said that we could see the VIX get to this period here, right, which was 22. I said 22, 22 and a half. Something like that, and then we were going to look for a pullback. And that's exactly what happened. We spiked up a little bit, and then we pulled back the same day, and then yesterday we had a big up day in the stock market, and the VIX is down. Same thing today, and now you're all the way down at 17. So in 2 days, or 2.5 days, from 22, almost 23, 22.90, or what was the high here? High here was 22.90 all the way down to 17 in 2.5 trading days. So that just coincides with the up days we've had in the market. But see what happens. I just didn't think the VIX was going to have a sustained rally above this level here. So now you have a high, a lower high, a lower high, and that's putting pressure downward on the VIX, okay? But you're still above the 50 and the 200-period moving average, so this is kind of in no man's land now, and that's why I'm not exactly sure what tomorrow brings. All in all, tomorrow is normally a quiet trading day, especially in the afternoon. After about 11:30 time frame in the morning, the market kind of goes in snooze fest the rest of the day on Friday, and we don't get a lot of down days on Friday. If you look back and throughout the entire year of 2014, I don't know, what did we have, like maybe 6 or 7, no more than that, real solid down days in the market on Friday. So we'll see how this year begins to play out. But here we go, Friday's upon us, and we'll see what happens. Hopefully this is helpful, folks. I hope you're learning, and I hope you're taking advantage of some of this information. I'm David Frost, MyStrategicForecast.com. This was another episode of Common Sense Market Analysis.